Hi, it's Gloria here with Myth versus Market, where I simply just ask questions about claims to find out if the path is tradable and gives you an edge. All of my studies are backed by data, and this week we're talking about gold, so let's go ahead and get into it. Now, I wanted to pose a question before I got started. Have you ever been right about a trend, but on the losing end of the trade? We're right, and it eventually we get stopped out, but it reaches our TP eventually. And another question that I have been asking lately is we know that gold trends, and I'll show you with the data that I've proven that gold trends, but even though it trended, why did five gold trend trading systems, I'm not talking discretionary, I'm talking about systems built with data, why did they lose money when I looked at it over 10 years and I tested them over 10 years? And we'll go ahead and talk about that. And then I wanted to ask a question and go over what does gold really do? I think that was really important. And so let's get into it. So building a gold trending system, you would think, yeah, should be really easy. And so let me just give you the lowdown on what we did. First I looked at is the claim that does gold really trend? Is it really a trending instrument? Right. So I asked that question. And then I said, okay, let's see if we can build some systematic data-based trend systems that should give us an edge based on 10 years of data. All right. So we looked at the 1 hour time frame. And over 10 years, it was about 64,000 bars. And then I had the same definition. So what I did is I said, let's define whether the market is bullish, bearish, or trend. And I used that same rule across the 10 years. It was like the 50 and the 200 EMA were the main things that I used to measure it. All right. So the bullish was the same for the whole 10 years. The bearish was the same definition. I didn't change it and say, I don't like how this is going, so let me redefine bullish or bearish or trending. I did not do that. I defined it once and let it be for the entire data set. Right. And then what I did is I accounted for like spreads and stuff like that. So I did a cost to it. And then I did a 1.5% or 1.5 ATR for the stop loss and then a 2R for the target. Okay. So that was it. And then the systems, I'll go ahead and go into the systems. They were like a pullback. It was continuation. It was momentum. And then it was simply daily bias. Okay. So now if you look at this is fantastic information here. Let me break it down for you. So we did find that the gold's bias is in fact very real, and the direction was never the problem at all. You can see here that when we looked at it, it actually did continue long. So whenever we identified, yeah, it's in a daily bearish state, it did continue about 59% of the time bullish, excuse me, and then it was 45% of the time for a bearish state. Now, when it did go bullish, it took off. It was a 29-point distance, right? And so if we're looking at it, like if you're doing a lot, then that would be, I think, $2,900. I think it's $100 a lot. And then the same with if it was a futures contract. So this is, we're talking spot gold, but if we were doing like CL data, which I'm going to do at some point, quite frankly. So this is a pretty good distance. So yeah, 59%, it does take off. And then when it does take off, it gives us this much. Okay, so we can pull this much out of the market. And then when it does go bearish, it does it 45% of the time. And then it goes bearish about 11 points. So that kind of gives you a little bit of a context, right? So with that being the case, how much time does it actually spend trending? Over 10 years, you can see over the 10 years, about 11% was bearish. So 6 days, that's a little bit more than 1 year. And then it was 1,648 days out of those 10 years. And then 38% of the time it was ranging. So the majority of the time, it actually was bullish. It would trend bullish, basically. So one would look at that and they would think, yeah, that's an edge creating material right there. So what we could say, in fact, was that gold does, in fact, trend. That's really not the question. And the strategy, so then I said, okay, I verified that gold does trend. That's great news. So now all I've got to do is build a system that captures that. And then we should be in the money. And I looked at 5 different strategies. I looked at the EMA pullback, a breakout strategy. So price hit a level and then took off. And then I looked at a pullback in continuation where price hit a level, pulled back and then continued. And then it was a momentum after like the EMA braids after a consolidation state. And then we looked at regime gated trends. The daily said it was going to be bullish. Did it go, let's build a strategy. Okay, then take a trade type of thing. All right, so I did that. And what did I find? Because we already said that, you know what, gold does trend. We said it trended about 59% of the time, right? Wow, if it does that, then one of these should really give us an edge, right? I also created a baseline because when you're dealing with data and studies, it's really not about screenshots and 20 trades or playing it in replay mode. It's a little more, how do I put it? The study's a little more rigorous. You have to create rules and different things and create a baseline to see the edge lives outside of the baseline. Okay. And so we created a baseline And then we looked at these different strategies for trending with that baseline. And so here's the interesting thing. Let me go ahead and break this down a little bit. So the trend, it did trend, but it did not beat the drift. Because if we look at this, okay, this gray bar right here, this is all within that baseline. Okay. And so if you look at the different strategies, 1, 2, 3, 4, 5, this was the momentum strategy. This was the only one. So after the EMAs were braided, did this price burst out? And that one actually did show profitable. Again, I tested it over 10 years, but it wasn't outside of the sampling noise. Okay. The rest of them were negative. And I started scratching my head and I was like, this does not make sense to me because we verified that gold does provide an edge, that it trends, right? That was validated. So I thought if it trends, then I should be able to do these trend strategies and then we should be in business. And that really, it didn't happen. And it was quite interesting that it didn't happen. So then I began asking, okay, why? It does not make sense to me. This does not compute type of thing, right? And so the reason why was now we're getting somewhere. Okay, it's this drawdown heat, whatever you want to call it. Okay, so we did that gold. This is the breakout study for an example. All right, so price breaks out and takes off. And the reason why when my testing was showing like, yeah, you're losing more than you're winning, you're not winning. And I kept going, why? It trends up. We already proved that. This is why, is because when I tested it and I did a 1.5 ATR stop, then price traveled lower, but it was like a below 2% ATR. Okay, so that's 210 points. That's quite the distance. And then it takes off, right? So this is all data. And so what does this do? You can see it was like 62% of the time, it actually dug deeper than my stop loss. So I got stopped out more because it dug a little bit deeper. So what does this mean, right? Maybe, again, this is not the trade. Maybe it's, okay, this is the signal, and then I need to wait for this. And then maybe that's the trade, and then you take it from here. That's certainly something to test to see, does that really give you an edge? So the bottom line was that gold moved in the expected direction. It sure did, but it dug deeper first. Okay, that's the moral of the story, right? And that's where I'm finding this pattern with the different instruments that I'm testing is when I put real data to it, I'll take a headline claim, price goes from liquidity to liquidity, gold trends, and then I'll say, okay, the claim said so. Let's go ahead and let's put real data behind it, not just screenshots and cherry picked trades or anything, but real data so that you can be confident in the strategy and then you can withstand the heat. That's the whole thing. And what I'm finding is that headline claim is part of the story. It's not the whole thing, not even for a second. And so that got me to thinking and asking more questions and stuff like that. And then what I looked at is out of those 10 years, I said, okay, where does the edge lie? Is it like, yeah, pretty much every year it does it. But if you look at it, it's all pretty much concentrated in 3 years out of 10. So 30% of the time is where the whole edge of gold lied based on 10 years of data. These 3 years, it actually did quite good. So if you were doing a trend following strategy for the past 3 years, probably be doing really well. A lot to unpack, I think. And what this did is it really caused me to think differently. It caused me to question a lot more. And it caused me to look at, okay, this is what the claim is, and this is what price is actually doing. And then I try to put those together to say, is that tradable? What do I need in order to make it tradable? Because I think that's the whole point, right? If you're going to trade something, you're going to be putting money on that trade. And obviously we want to be positioned where our edges, we're going to win more than we lose. And so what I found was that eventual does not mean that it's always tradable. Just because it trended doesn't mean that it's a guaranteed thing. And to me, this was like one of the biggest things, right? The path matters more than we're initially led to believe. The drawdown matters because that determines on, are you going to get stopped out, or are you going to go ahead and can you withstand it when it reaches so deep into your drawdown that you're with 1 or 2 pips of getting stopped out? Are you going to close the trade before then? Are you going to get those fear in your stomach, that type of thing? And so what I come to realize is that there are a couple things that can be true at the same time, right? A trading claim can both be true and it can be like a trading myth at the same time, right? Not necessarily tradable because of what we talked about. And so those were some of the reasons why I really turned to data in all of this, right? So I think that's probably the moral of the story as far as I'm concerned, is that's really what it's about. And so there's a couple things that you can do. Let me go ahead and get centered on the screen, is that you can go ahead and check on your own charts and see, pull it up on your own. Go ahead and pull up and look at, don't cherry pick breakouts, but just take breakouts and then look at, okay, how much did price dig against you before it started going your direction? And then ask simply, what does that mean for your trading? Yeah, so if you like that, go ahead and in the description, we do have the data files and stuff that you can check out if you want to. You'll have to go to Gumroad and grab them. They are 100% for free. And then they come with prompts that you can load up that you can examine the data on your own. Because I think that's really important. I think the moral of the story for me is quit taking a lot of the stuff at face value. If it's real, great, then I'll develop a strategy that gives me an edge. If it's not, then I want to know so I don't waste time on it anymore. So there you go. I hope that was beneficial and I hope it added value, and best of luck on your trading, and we'll see you on the next video.